This is Bobby here, back with another video. For today, we're gonna look into a lesson about buying the blood. So before moving on, I just want to remind you guys, don't forget to hit the like button, hit the subscribe, put some comment, show some love, and don't forget to join the free Telegram group link in description below because I'm fully active there. Okay, so let's get into it. So for today's video, it's not similar to other videos. Previously, I've done market updates. Right now, I want to share some lesson that I learned throughout my experience and for the current market that I can share to you guys. So for the lesson today, I will be teaching about buying the blood lesson, and essentially people confuse about two different things: buying the blood and buying the dip. They often look at it as a similar thing. For me personally, I try to separate those things, and it's much easier for you to identify which is which. You can identify easily which one is buying the dip and which one is really buying the blood. So let's get into it. I have some key points here for you to remember if you want to really buy the blood. Okay, for example, I wrote on the left side here, buying the blood means you're buying when the market is in fear. It's different when the market isn't dipping, because when market is in fear, people start to capitulate. People start to sell their bags. People start to, they start to fumble and throw everything out just to keep stable in their wallet. So when you buy during fear, you are opposing them. You are against the masses, buying when other people are selling. It's different from buying the dip, because when you buy the dip, you buy in strength, in market strength. Market is moving up and you're buying that significant or small dip in the market and for it to go higher. But when you're buying the fear in the market, when you're buying the blood, you literally buy when other people are feeling the market is gonna dump. That's why I say it's a two different thing. And buying the blood means also you're buying the red dump candle, which is risky, or even you wait for 1 or 2 days after the big dump. What this means is you don't wait for market to actually rise from the bottom, which is like maybe 10%, 20%. You're actually buying the blood. Blood is on the street, you are going into it. So that's why you're buying the red dumb candle. You're buying, or you're waiting for a day, maybe waiting for a bit smaller consolidation in the lower time frame, and you're engaging and have some position in that time. So that's the second point. Third point is you're buying when the market dips 15 or even 30% from the highs. And this is different from your buying the dip. You're actually buying when the market dips more than uh people consensus. People want a dip in the market for like maybe 5%, 10%. But when the market dips 15 or 30%, it really impacted people account, and their drawdowns it's much bigger. So they start to take profit when the market is going in a dip, when market is going into the blood. That's where you start to get in when people are in, fear. There's less euphoria in the market. So there's three key points you need to remember when you really want to buy the blood and avoid being in the same mindset as the other. Buying the blood is really important in the bull market because you don't want to pay a premium price. You don't want to, of course, you can make money buying high and sell even higher, but that's you're paying a premium price. When you're buying the blood, you're actually getting a discount compared to everyone else. When everyone is selling their bags, you're buying. When everyone thinks market is dumb, you're buying. When everyone thinks everything is over, you're buying. That's why it is very hard to do. Only people with experience can identify, can get the feel of when the market is actually, the street full of bloods. So let me show you how you can engage properly to actually bid when the market is in fear. So let me just move this right here. So, based on the recent example, we can see the market is in a ranging zone. This is what I call a ranging zone. If I just make a box, a big box like this, market is just ranging, right? But you can see some differences in this box. There's actually a deviation somewhere. Let me just make the box a bit clearer. There are certain points in this ranging box where the market actually go against the normal ranging. It start to making a deviation. What is a deviation? This lower part right here, lower part here, and also below this. This is what I call a deviation. You have a market ranging, but then when it start to go out of range, and it start to reclaim back the area, that's what we call a deviation. I personally call it a fake out or a shakeout. When it is occurring at the bottom of the base, it is a shakeout. It shakes people out. When it's occurring on top of the base and it start to going back down, that's what I call a fake out. So this is a shakeout in the market. People are getting shaken out when the price are going lower than the expected. So right off the bat, we can see that the market is going to start to break lower, and people will believe that the market will start to go lower and lower towards the next support. They always do that. They always think the market is going to go to the next support, going lower. They don't think the market is crashing. No, they don't believe that, but they believe that they can sell their bags when the market breaks this ranging zone because they want to buy at a much lower price. That's why people start to sell their bags. They don't just sell their bags because the market is over. No, they still believe the market is going higher, but they just want to buy at a discount. But what they think is they can get more discount. Meanwhile, they are the ones making that discount for people like us that are buying the blood. So that's why this lesson is important. They believe the market is about to go lower, but in fact, market reclaims back the area and start to go higher. And guess what? They will end up buying at a much higher price instead of buying the blood. And same thing happening again previous month, earlier this month, when market starts to break the lower base once again. Everyone thinking market is at least going to touch this 52k level, but instead market starts to reclaim and going back higher. It didn't even touch this 52k area, which I personally was expected because it happened previously. It already did a deviation, so now it did a more severe deviation, which really shakes people out, and expect market to at least go 52k or even 40k, which is that's when the market is in fear, when people are starting to call much lower price target so that they can build their position at a much lower price. And so we can mark this area with a deviation pattern. This is what we call a deviation here. This is deviation, the severe deviation, and this is a small deviation that the market is making. And again, the process happens like this. Let me repeat one more time. The market is in ranging zone, and when it breaks the range lower, people start to sell their back, and that's where you bid the blood. Of course, there is no particular area that you can buy into when the market is actually in fear, but you can actually look into proper market reclaim. You see, when price break down, what I said earlier, you can actually buy the red dump candle, or you can wait a day for this particular dip. This particular dumping right here, market actually dump with a big volume, breaking the previous support. This is actually the previous support that market is holding. So it breaks lower. It breaks lower. Let me just change that into a blue color. So this is the previous support. Okay, take note. This was the previous last point of support, and market breaks lower. So market's like dangling below this support. Everyone was scared. Everyone was thinking, oh no, market is going to retrace, like Bitcoin is going to retrace, touch this resistance area and going to go much lower. But it didn't. Market starts to what I call again, it breaks down and start to reclaim back, retest, and going higher. So that's why you need to see the reaction when market breaks the support. So why is it important to look at the market when market is breaking the support? That's where deviation occurs. That's where the shakeout occurs. So as you can see previously, this was the support, right? Market breaks and it reclaim higher. And recent one, this was the previous support in the market. If I move it much lower here at this last point of support, and back in May, market breaks those support, market break this essential last point of support, and that's where the shakeout happens. Market quickly did a big massive rejection with a big volume, and it starts to reclaim back the area before going higher. So that's why I said this is where people start to call much lower price target, because they want to buy lower and lower, but instead it didn't happen. So this is based on the recent example. Let me show you a previous example that happened. Let me remove this part. At this area, again, market is forming a consolidation. Okay, market is forming a consolidation, making it a white box. Okay, let's just look at right here. Market is forming a consolidation, right? And then what happened was market starts to break out. Okay, that's good. Market is breaking out. We all love that. But when market is breaking out, we want to see a continuation. But guess what happened? Market starts to go back down and start to making a lower low. So this is where people are getting shaken out. What happened this at this area is people are start to buying higher because they want to buy high and sell higher. They're buying the breakout. What happened here is it is happening a deviation to the upside. I mean deviation to the downside. This is what I call a fake out. Let me just write that down. A fake out. Okay, a fake out. It breaks out, but then it's a fake one. So it's I call it a fake out. So market starts to go lower and lower, breaking this previous support that the market has at this area and also at this area, and it starts to go lower. Again, when market is breaking lower, that's where you need to see, you need to look closely if market is gonna do a quick reclaim and gonna do a deviation. So again, when market is breaking down, people are going to start calling for much lower price. They're going to start buying at this price area. For example, market breakdown, market is breaking the 40K support. So now we are going to see market going to at least 36K, 37K. You will hear this kind of people saying, okay, I'm going to start buying at 36K, 37K. This is a good demand level, blah blah blah. But guess what? That didn't happen. And market actually market start to make this deviation. It consolidate, having a big rejection here, and then consolidate before going higher, and actually it actually pump from this low almost 100%. So that's why when people sell at this low right here, guess what they feel after the market pump higher almost 2x. So yes, in the bull market, you don't want to get caught in, selling the deviation, selling at market fear. That's where you want to buy. That's where this lesson become important. That's why I really want to show you guys and tell you guys, this is actually important in the upcoming bull run that we are going to have. Plenty of those are going to happen, whether it be in the smaller time frame, 15 minutes, 20 minutes, 1 hour, 2 hour, or even daily. It happens. Okay, this thing happened. You can see when the market is in fear, you can see the market is dumping below support, you can see the market dips 15 or 30% from the market highs. For example, here market is dipping almost 27%. Of course, people are, have negative in their, they are having drawdowns in their wallet. They're having drawdowns in their trading account. And for example, here market is dipping, 20%, 21% from the highs. They are in drawdown. So they don't want to see, more drawdown. They start selling. They don't buy. So that's where discount is happening and people start fumbling their bag. That's where we come in. We start to buy the blood. So this is the lesson that I want to talk about. It is not a longer complex video. I just want to make it simple, short, so that people can understand the difference between buying the dip and buying the blood. It's a two different thing. Make sure you distinguish those differences and take advantage when market is in fear. Okay, I guess that's all. I guess that's all from the lesson for today. Again, don't forget to hit the subscribe button. Don't forget to like and comment, show some love, and join the free Telegram group. Link in description. I'll be active there, posting more education, posting more alpha calls, and more high cap potential plays to even market reach 10 to 20x in the upcoming bull run. So I can't wait to meet you there. Thank you so much for listening till the end. See you in the Telegram group. Ciao.